Good day, everyone. Welcome to Financial Basics for Newcomers to Canada. My name is Amrita Paul. I am a certified financial planner professional. Today, I will talk about money in Canada. I will share what I learned when I first came here. I hope this will help you. After I finish, I will answer your questions. If you have a question during the talk, you can write it down. I will answer it at the end. You can also raise your hand and I will answer right away. Today we will learn about how to get a social insurance number, commonly known as SIN. How to protect yourself and your family from scams. How taxes work in Canada, like sales tax, property tax, and income tax. What banks and credit unions are, how borrowing money works, and the two types of credit cards and how to use a credit card. Let's get started. Social insurance numbers. So, what is a social insurance number? A social insurance number, or SIN, is a 9-digit number. The Government of Canada gives this number to each person. It is very important. You need to keep it safe and not share it with others unless it is necessary. So, why is a SIN important? To work in Canada, you need a SIN to get a job. Your employer uses it to tell the government how much money you earn. Second, to get government benefits. The government uses your SIN to know if you can get benefits like Canada Child Benefit, money every month if you have children, GST HST credit, money back from taxes you paid, healthcare. In most places, you need a SIN to apply for health services. Third, to file taxes. Each year, you must tell the government how much money you made. This is called filing taxes. Your income is connected to your SIN. If you don't file taxes, you may not get the benefits or credit you should. To save for the future, the SIN helps track how much money you can save in a special accounts like RRSP, which is Registered Retirement Savings Plan, TFSA, which is Tax-Free Savings Account. These are ways to save money without paying too much tax. When else do you need your SIN? Student loans. You need your SIN to apply for federal or provincial student loans. This helps the government check your information. Banking and credit. Some banks ask for your SIN when you open a new bank account or apply for a credit card, but you do not always have to give it. For example, if your account earns interest, like an RRSP, they must report it to the government using your SIN. If your account is a regular savings or checking account, you don't need to give your SIN. Credit card and loans. You do not have to give your SIN when you apply for a credit card or loan. When companies may ask for it to check your credit, you can say no. Sometimes it helps if you have a common name, you don't have much credit history, you cannot find your credit file. You can choose to give your SIN or not. If you are not sure, you can ask why they need it. Protect your SIN. Social insurance number. Your SIN is very special number. You must keep it safe. Only give it in some situations. For example, taxes. The CRA, Canada Revenue Agency, collects taxes. They use your SIN when you do your taxes. This helps them know who you are. Second, getting a job. When you start a new job, your boss will ask for your SIN. They need it to pay your wages and taxes. This is normal. Third, government benefits. Some forms for government helps like child benefits or pensions ask for your SIN, but never give your SIN by phone, text or email. If you are not sure, you can call or visit Service Canada. Fourth, banks. Sometimes banks will ask for your SIN, for example, when you apply for student loans. When you open a bank account that earns interest, like extra money, they use your SIN to tell the government how much you earned. Always be careful. If you do not trust the person asking for your SIN, do not give it. Ask for help first. Keep your SIN safe. Your SIN social insurance number is very important. It tells the government who you are. You must keep it secret. If a bad person, let's say a scammer, gets your SIN, they can pretend to be you. This is called identity theft. They can trick the government, banks, or even your job to take your money. Scammers can do many bad things with your SIN. They can take your money. They can sell your home without you knowing. They can get a loan from the bank and you have to pay it back even though they got the money. It is very hard to get your money back after a scam. That's why it's important to protect your SIN and not share it unless you are sure it is safe. Only give your SIN if you are sure the request is real. Sometimes scammers pretend to be from the government, police or bank. They may lie and say, "You will lose your benefits. You have to leave Canada. The police are coming to arrest you." These things are not true. They say these things to scare you, so you will give your SIN. If you are not sure, do not give your SIN. You can say, "I need to check that this is real." Then hang up. Call Service Canada or the bank using the number on their website, not the number the caller gives you. Protecting your SIN is very important. It helps stop identity theft and keeps your personal information safe. If you feel unsure, ask someone for help or contact a trusted organization. Next, protecting yourself against scams. Other scams to watch for. Scammers don't only try to steal your SIN, they also try other tricks, especially with newcomers. Here are some common scams. First, fake immigration help. Scammers say they can help you get your visa faster, but they want money or gift cards. This is not true. Real immigration help comes from the government. They will not ask for gift cards or money by phone. Second, fake calls or emails. Scammers pretend to be from the government or a bank. They might say there is a problem with your immigration or your bank account. Then they ask for your SIN, money or gift cards. Some pretend to be tax workers and say you will be deported if you don't pay. This is a lie. Real tax workers do not talk like this. Third, fake job offers. Some scammers say they have a job for you, but first you must pay for a work permit. Real jobs never ask you to pay money to get hired. Rental scams. Scammers post fake ads for homes or apartments. They ask for money before you see the place. Always check if the rental is real. A real estate agent can help. How to stay safe from scams? There are things you can do to protect yourself. Be careful. If someone offers you something quickly or asks for money fast, be careful. Scammers often try to scare you. If you feel nervous or afraid, it might be a scam. Check who you are talking to. If someone says they are from the government or a bank, ask for their name and job title. Then tell them you will call them back. Do not use the phone number they give you. Scammers give fake numbers that sound real. Find the real phone numbers for Service Canada or your bank on their website and call that number instead. Watch for gift card scams. No real bank, police officer, or immigration officer will ever ask you to pay with gift cards or prepaid credit cards. They will never make you pay by phone or ask for money right away. You can always pay at their office in person. Scammers like gift cards because they are hard to trace. If someone asks for this, it is a scam. More tips to stay safe. How to stay safe from scams? There are some things you can do to protect yourselves. For example, keep your information safe. Don't give personal information on the phone or in email. If someone comes to your home and asks for your information, do not give it. Say you will go to the bank or Service Canada yourself. Bank and Service Canada will never send someone to your home. Check job offers. Before you accept a job, look up the company or ask someone to help you check if it is real. Be careful with rentals. Before you pay for a rental, make sure the place is real. Talk to the landlord directly. You can also use a realtor, a person who helps people find homes. Ask for help. If you are not sure about something, talk to a settlement worker or a legal expert. They can help you understand immigration or legal problems. Report scams. If you think someone tricked you, call the police. You might feel embarrassed, but it's not your fault. You may be able to get your money back and help stop the scammers from hurting others. Let's do an activity. In this activity, you will hear about some situations that could either be real or a scam. You will have to decide if this is real or a scam. You get a phone call. The person says they are from the Canada Revenue Agency, CRA. They say you did not pay your tax and must pay now by e-transfer or gift cards. They say the police will come if you don't pay. Real or a scam? Explain your answer. you know that it is a scam because the CRA does not ask for gift cards or e-transfers. They ask you to pay at the bank or online. The CRA does not call and say the police will come. They send letters or messages on your CRA account. Scammers try to make you feel scared, so you send money fast. If this happens, hang up the phone. Do not send money. Call the real CRA or tell someone you trust. Second activity. You get an email. It says your bank account is locked. It asks you to click a link and type your bank login and password. Is it real or a scam? This is a scam because banks do not ask for your password by email. A real bank will not tell you to click a link and enter your private information. The email may look real, but it is from a scammer. If you click the link, the scammer can steal your money or information. Do not click the link. Delete the email. If you are not sure, call your bank using the phone numbers on your bank card. Another example. You get a new job. The employer asks you for your social insurance number, that is SIN, and ID to set up your pay. Is it real or a scam? This is real. A real employer needs your social insurance number or SIN to pay you and for taxes. They also need to see your ID to make sure you are the right person. They ask for this information after you get the job, not before. Make sure the job is real. You can check the company's website or talk to someone who works there. If you feel unsure, ask someone you trust or call Service Canada for help. Next example. You get a text message. It says you won a $500 gift card. It tells you to click a link and give your personal information to get the prize. Is it real or a scam? This is a scam because real companies do not ask for your personal information by text message. Scammers want you to feel excited, so you do not think carefully. If you click the link, a scammer can steal your information or hack your phone. Let's take a look at taxes in Canada. In Canada, there are three main types of taxes. Sales tax. This is extra money added when you buy things or pay for services. Property tax. You pay this if you own a home or a land in Canada. Income tax. This is money you pay to the government from the money you earn at work. Your employer usually takes this from your pay. Let's start with sales tax. Let's try to understand with an example of sales tax in Ontario. Sales tax in Ontario is not the same in every province in Canada. In Ontario, it is called HST, that is Harmonized Sales Tax. It adds 13% to the price of the things you buy. For example, if something costs $100, the tax is $13. If something costs $50, the tax is $6.50, half the tax. This tax money goes to the provincial and federal governments. It is added to the price when you pay. In this example, the item costs $27.93. With 13% tax, the total is about $31. Now let's take a look at income tax in Canada. The government uses income tax to pay for things like schools, hospitals, roads, and other public services. When you make money, part of your pay goes to the government as tax. Your employer takes the tax from your pay and sends it to the government. Now, about tax brackets. In Canada, people who make more money pay more tax. This means the tax rate is different depending on how much you earn. In Canada, we have different levels of taxes called tax brackets. There are usually three: low, medium, and high. If you make a small amount of money, you pay a low tax. If you make more money, you pay more tax on the extra money. But you only pay the high tax on the part that is in the high bracket. This system helps people who earn more pay a little more to support the community. The government uses tax money to pay for services like healthcare, schools, and roads. If you are not sure how taxes work for you, you can talk to someone at CRA, Service Canada, or ask an accountant or tax expert. You can also find help on the government website. Your employer might also take money from your pay for other things. This can include health insurance to help pay for medicine or doctor's visits, retirement saving plans to help you save money for the future, charity donations if you choose to give money to help others, union dues if you are a part of a workers' union, other plans or programs. These payments are voluntary, which means you choose to join them or not. Employers may deduct amounts for other voluntary programs or benefits, such as group health insurance, retirement saving plans, or charitable contributions, as well as union dues and other premiums. Property tax is a mandatory payment homeowners make to the local government based on the value of their property. It supports local public services and infrastructure that benefit the community. The local government assesses the value of your property and they use a tax rate to calculate how much you owe. The tax rate is usually expressed as a percentage of the property's assessed value. Property taxes are typically paid annually, but the frequency can vary depending on local regulations. Some areas allow for monthly or quarterly payments. So, where exactly do tax dollars go? Taxes help pay for everything the government does. In Canada, we have public health care. This means the government pays for most of our doctor's visit, hospitals and medical services. A big part of our taxes goes to health care. Taxes also help pay for schools and education, social services, that is to help for people in need, roads and parks, police, ambulances and firefighters, libraries, and many other important things. Here are some more examples of what tax dollars pay for. Healthcare is provincially funded, can vary province to province. In theory, it is universal, but its difference depending on each province. Some provinces, for example, what are universal is everyone can get this healthcare, Canada Child Benefit, parental guardian benefits, and then there are others which other benefits where you contribute and government also contribute a part of it. For example, employment insurance, sickness benefits, Canada pension plan, retirement income based on the length of time you worked. And then some are which are need based, you get only if you need it, like disability benefit, subsidized housing, social services, guaranteed income supplement and OAS. The government gives help to families with children in a few ways. Canada Child Benefit, commonly known as CCB, gives money each month to help pay for the cost of raising children. Free education is given to all children until they finish high school. The government also gives RESP grants to help save for school after high school. In Ontario, the CCB is the main way the government helps families with money. Similarly, each province has their own program to help families with education saving plans. Your handout has steps on how to apply for the CCB. An RESP, that is Registered Education Saving Plan, is a special bank account to save money for a child's college, university, or trade school. When you put money into the RESP, the government adds extra money, up to $500 a year if you save $2,500. So typically it's 20% of what you contribute, the government matches that amount, maximum up to $500 per year per child. This money grows over time. The child can use it later to help pay for a school after high school. It is a great way to save for child's future. The Ontario Health Insurance Plan, commonly known as OHIP, covers a wide range of health services for residents of Ontario, but not all services are fully covered. Like OHIP, each province has its own health insurance plan and list of services that are covered and list of services that are not covered. OHIP is designed to cover essential medical services to ensure that residents have access to necessary care. Here is a general overview of what is covered and what is not covered by OHIP. Some examples of covered services include doctor's visits, visits to family doctors and some specialists when referred by your family doctor, hospital services including surgeries, emergency room visits and diagnostic tests, laboratory services, diagnostic tests and laboratory services ordered by a physician, maternity care, prenatal and postnatal care including visits to obstetricians, midwives, and delivery services. Vaccinations. Certain vaccines provided through public health programs. Mental health services. Some mental health services provided by psychiatrists and other mental health professionals. Eye exams. OHIP covers one major eye exam per year for individuals under the age of 20 and over the age of 65. Now let's take a look at not covered services. Prescription drugs. Medications prescribed by a doctor, usually outside the hospital or in OPD clinics, are generally not covered by OHIP. Residents may have coverage through other programs like the Ontario Drug Benefit or respective drug benefit programs in other provinces. Dental care. Routine dental care, including cleanings and fillings, is not covered under OHIP. Some dental services for specific populations, example children, low-income individuals, are covered by other programs. Vision care. Routine eye exams for individuals between the age of 20 and 64 are not covered except for certain medical conditions. Now let's take a look at the settlement services for newcomers. Settlement agencies are there to help people who have just arrived in a new country feel comfortable and supported. They give you information about important things like how to find a place to live, how to get a job, and how the local community works. They are here to help you however they can, and these are just some of the great things that they can do. Now let's take a look at banks and credit unions and payday lenders. Banks and credit unions are big companies that help keep your money safe. They also give other services like loans, like borrowing money. The government checks these companies to make sure they are safe and fair. There is also help if you have problems with your bank. At a bank or credit union, you can open two main types of accounts: saving accounts to save your money, checking accounts to use for daily spendings like paying bills or buying things. When you open a bank or credit union account, you get a debit card. You use the card to pay for things, take out money, or talk to someone at the bank. There are two main types of accounts: checking and savings. They are similar, but it's important to know the differences so you don't pay extra fees. Like checking account. This account is for money you spend soon or for your daily expenses. Most people use this account to pay bills, buy food, and get cash. Saving accounts. This account is commonly for saving money you don't need right away. It's good for emergencies like car repairs or needing a new computer. You can also save for travel, sending money to family, or a big purchase like a car or a house. Some people have both accounts at the same bank. When you use your debit card, you choose checking or savings. Here is a tip. Use your checking account for most things. Saving accounts often charge a fee or have limits if you can take out money, or so pay attention for the transaction fees that may apply to saving accounts, or also the number of transactions allowed depending on the type of checking account. Now we are going to do an activity. In this activity, you will read through some people's stories. These people are also immigrants to Canada. These are not true stories. After you hear each story, we will discuss and decide what the person needs from the bank. Good? This is Fatima. She is 28 years old. She came to Canada 2 months ago. She lives in a shared apartment and works part-time at a store. She needs an account to deposit her paychecks from work. She does not want to pay monthly fees. Fatima goes to a bank. The teller at the bank suggests these options: student account with a monthly fee, basic checking account with no monthly fee and a few free transactions, business account for people who own a business, savings account with high interest. What do you think she should get? The best option for Fatima is option 2, basic checking account with no monthly fee and a few free transactions. Here is why. Fatima needs a checking account to get paid and pay bills. She does not want to pay monthly fees, so option 2 is good because it has no monthly fees. The basic checking accounts lets her do some transactions for free, like paying bills or taking out money. The student account has a monthly fee, so it is not good for her. The business account is for people who have a business. Fatima does not have a business, so it is not right. The saving accounts is for saving money and earning interest. It is not good for daily pay and bills. So the basic checking account is best for Fatima. Let's take a look at another case. This is Carlos. Carlos is 22-year-old and goes to college. He works part-time and gets some money from his family. He has never had a credit card before. He wants to learn how to manage his money better. He is interested in saving, but he also wants to buy some things now and pay later. Carlos goes to a bank. The teller at the bank suggests the following options: premium credit card with high limit and annual fee, student credit card with a low limit and no annual fee, TFSA, that is tax free savings account, business credit card for self employed people. What do you think he should get? The best option is probably a student credit card with a low limit and no annual fee. And the reason? Carlos is a student, has never had a credit card before. A student credit card is good because it has low limit. This helps Carlos spend only a little money and learn to pay it back. The no annual fee means Carlos does not have to pay extra money every year. Carlos wants to buy things now and pay later, so a credit card helps with this. The premium credit card has a high limit and an annual fee. It is better for people who have had a credit card for longer. Carlos may spend too much and pay fees. The TFSA is good for saving money, but Carlos wants to buy now and pay later, so a credit card is better now. The business credit card is for people who are self-employed. Carlos is a student, so this is not right for him. There are other companies that offer money services, but be careful. Not all of them are safe. Not all lenders are good. Some people and companies try to take advantage of newcomers and others who need help. It is safest to use a major Canadian bank or credit union. If you want help from a financial advisor, someone who gives money advice, make sure to check their credentials first. This means checking that they are trained and allowed to do the job. One type of company to be careful with is called a payday lender or predatory lender. They may look like bank, but they charge very high fees. They may not tell you the full cost, and if you don't pay on time, you could get into serious money problems. Now, let's understand why to avoid payday lenders through an example. Let's say your car breaks down and you don't have the $300 to fix it. Without your car, you can't get to work and earn money, so you decide to take a loan. 2 weeks later, you make the money and go to pay back the loan, but you will have to pay interest. Interest is an extra fee for borrowing money. If you took a loan from the bank, you would pay $300 plus about $5.81 in interest, which comes around 1.9% for the 2-week interest. If you used your credit card to take out money, you would pay $300 plus $7.82 in the interest, which comes around 2.5% for the 2 weeks loan. Now, if you borrowed from a payday lender, you would pay $300 your principal plus approximately $63 in the interest, which is close to 21% of the borrowed money for only a 2 weeks loan. Payday lenders are companies that charge very high interest. They usually have bright signs that say you can get free money, but they are not a bank or credit union, so be careful. Now, let's take a look at credits. The word credit can mean two things. Credit score. This is a number that shows how good you are with money, means how good you are in borrowing money and paying back on time. It helps decide how much money you can borrow. Credit can also mean the money you borrow. Your credit score is like a grade that shows how good you are at repaying the money you borrowed. It looks at your repayment history, how much you owe, and the other things. Your score is between 300 and 900. A higher number means you are good at handling credit. Lenders use this score to decide if they will lend you money. Here are some ways to increase your credit score. Get a credit card if you can. If you are old enough, you can get a credit card. Start with one for beginners or with a small limit. You borrow a little money and promise to pay it back. Use your credit card wisely. Only spend what you can pay back. It's not free money. Paying your bills on time will make your score better. Pay your bills on time. Pay your phone, rent, or other bills on time. Late payments can make your score go down. Don't use too much credit. If you have a credit card, don't use all of it. Use less than the maximum amount. This shows you can handle credit carefully. Check your credit report. Once in a while, check your credit report to make sure that there are no mistakes. You can get a free report every year. Most of the banks on their online banking, they have this free credit score and report 24/7 available to you. Most important, be patient. Building credit takes time. Be patient and keep doing the right things. Over time, your score will go up. Now, let's take another group activity. In this activity, you will see 4 situations and you will have to tell me, will this make the credit score go up, down, or stay the same? Ali checks his credit score by going to the Equifax website. Will this make the credit score go up, down, or stay the same? Ali's credit score will stay the same. You can check your credit score as many times as you like. This will not hurt your credit score. However, sometimes you will be charged if you are checking it directly with Equifax. You will have to pay money to see your credit score. Second scenario. Maria decides to apply for a new credit card because it has a better rate than the one she has now. Will this make the credit score go up, down, or stay the same? Maria's credit score will go down, but only a little bit. When you get a new credit card, your credit score can go down, but usually only a little bit. If Maria pays all her bills on time, her credit score will go back up to what it was before. Let's take another case. Angelo changes jobs and is now making a lot more money. His salary is not double what it used to be. Will this make the credit score go up, down, or stay the same? Angelo's credit score will stay the same. This one is surprising, isn't it? How much money one makes does not change your credit score. The things that do affect your credit scores are things like how much debt you have, how many different kinds of debt you have, and if you pay your bills on time. Your credit score will be low if you do not pay bills on time, no matter how much money you have. Let's continue with Angelo's case. Because Angelo is now making more money, he decides to pay off the rest of his car loan in just one payment. Will this make the credit score go up, down, or stay the same? Angelo's credit score will go up. Even though making more money does not improve your credit score by itself, your credit score can be improved if you use that money to pay off debt. So, when you are thinking about getting a credit card as a newcomer, it is important to compare the cards. Look at things like fees, interest rates, and benefits. Look for cards that have no annual fees or low annual fees, reasonable interest rates, ideally around 20% or between 20 to 22% annually, rewards or money back 1 to 2% of what you spend. Before you apply for a card, check with different banks. Ask about the requirements for newcomers. Some banks also offer financial education programs to help newcomers learn about credit in Canada. Time to time, these banks also have promotional offers for newcomers for saving accounts, bank accounts, or credit cards. Check on that as well. Start small. Choose a card with a low credit limit and use it for regular payments. This will help you build your credit history and make it easier to manage. Try to only use credit for things you need. You may feel pressure to buy things you cannot afford. Many Canadians have money problems because they use credit cards too much. It's not free money. It's the money that you are borrowing, but you have to pay later. So keep in mind that you are paying it later. And ideally, it is good to pay in full all the credit that you have used on a monthly basis. Try to borrow money only for big things like a house or a car. As mentioned, credit cards needs to be paid every month. Each month you will need to pay at least the minimum payment. It's good to try to pay off as much as you can. Ideally, try to pay the full balance every month and before the due date. If you pay your credit card in full on time before the due date, you won't pay any interest. So basically, the money you borrowed it for free, no interest, if you are ensuring you make payment in full and before the due date. But if you don't pay it all off, it can cost you a lot of money. So here is an example. Let's say your car breaks down and you need $2,500 to fix it. You pay with a credit card because you don't have the money. If you pay only the minimum amount of $75 each month, approximately, just assume, it will take over 4 years to pay off that $2,500. If you pay $275 each month, it will take 1 year to pay off the balance, and you will pay about $77 in interest. If you can pay the full $2,500 in the same month, you won't pay any interest. If you are careful with your credit card, it can help build your credit. But if you don't pay on time or pay very little, it can hurt your credit and your finances.